Hello, this video is to explain important concepts relating to income from salaries. Myself, Dr. Abbas Vattoli, Assistant Professor, Amal College of Advanced Studies, Nilam. In this tutorial, I will be explaining heads of income, income from salaries, and finally, the important points relating to salaries. Let's begin with the heads of income. For income tax purpose, different sources of income are grouped under 5 heads. They are salaries, income from house property, profits and gains from business or profession, capital gains, and income from other sources. The aggregate of income from all these 5 heads are known as gross total income. Now, income under the head salaries. Section 15 to 17 of the Income Tax Act 1961 deals with salaries. Section 15 discusses about the basis of charge. It says that salary income is chargeable to tax either on due basis or on receipt basis, whichever occurs earlier. And section 17 deals with the meaning of salary. It says that it includes salary, perquisites, and profits in lieu of salary. Now, the important points relating to salaries. We can call it as features of salary income. Otherwise, an income to be counted under the head income from salaries, it should satisfy certain conditions. They are: first, employer-employee relationship. In order to consider a receipt as salary, the payer and payee should have a relationship of employer-employee nature. Because of this provision, salary of MLAs and MPs are not chargeable to tax under the head salaries. Instead, they are chargeable under the head income from other sources. Because MLAs and MPs are not employees of government, but they are the government itself. Second, full-time or part-time. For income tax purpose, there is no difference between full-time or part-time employment. And similarly, if an employee works for more than one employer, salary from all his employers are clubbed together and chargeable under the head income from salaries. Foregoing of salary. For income tax purpose, voluntary foregoing of salary is merely an application of income, and such salary is taxable on accrual basis. Even if you forego your salary, but it will be considered as application of your salary and it will be taxable or chargeable to tax. Surrender of salary. However, if an employee surrenders his salary to the central government under the Voluntary Surrender of Salaries Act 1961, then he will be exempted from tax. Next, salary paid tax-free. This is a situation where employer pay the salary taxes on salaries of employees. In this case, employee's salary includes the salary received plus tax paid on his salary by his employer. However, the employee will get a tax credit equal to the amount of tax paid by the employer. So, the employee's tax liability on his salary will be the balance amount, if any, payable on his salary income. Then finally, place of accrual of salary. As per the provisions of Income Tax Act 1961, salary earned in India is deemed to accrue in India and chargeable to tax in India. So, if an employee works in India and he gets salary, whether he received the salary from abroad or whether he received the benefits after the retirement, it is no matter. It is deemed to accrue in India. So, an employee working in India and settles abroad and receives pension for his service in India, then his pension will be chargeable to tax under the head salaries in India. So far we have discussed about the important features or points to be remembered while considering salary income. I hope you understood. Thank you for watching. Have a nice day.